I believe we got a confirmation from Jerome Powell's mouth himself that the bull run is coming back for cryptocurrencies and stocks.
We see a gradual cooling, but we don't really see that yet. So those are the things we'll be watching. But as I mentioned, a majority of us do feel that will be appropriate in the remaining 4 meetings of the year to begin to reduce rates again.
The reduction of the rates simply means he's putting more money into the market, and this always benefits crypto. So much so that not only am I thinking about buying cryptocurrency, but I'm going to start getting very aggressive in the next couple of weeks and months. Did you guys know, this is really crazy, that a majority of Trump's wealth came directly from cryptocurrency according to Forbes magazine? Did you know that Trump made $600 million total just in 2024, and about 67% of all of his income in 2024 came from cryptocurrency? His net worth is about $2.9 to $3.1 billion. That means 40 to 60% of his wealth is now linked to crypto in some way, shape, or form. And some sources even say that 89% of all of his net worth is tied to crypto. And guess what, guys? There's a really good chance that he probably won the presidential election because of his choice to adopt crypto. He was going to the crypto conventions. I was actually there at Bitcoin 2024, and he definitely leveraged crypto to win the presidential election. Trump launched a SPAC, which is basically a company that buys other companies to invest in crypto and AI. His social media platform is applying for a cryptocurrency ETF. He's putting Bitcoin in the company treasury. He launched an NFT collection. He launched meme coins. His wife launched a meme coin. And World Liberty Financial, which is a crypto company, buys into DeFi projects. And at the same time, they just launched the trading of World Liberty Financial token. So he launched his own token as well. I mean, I don't know how much more you need, but the president of the United States is probably going to ensure not only cryptocurrency, but his net worth. And this might be the biggest play for our president in his business history. So just to be clear with you guys, Jerome Powell cutting interest rates was the last piece of the puzzle. We know Trump is extremely bullish on crypto. We know Trump has been coming at Jerome Powell because of the interest rates and telling him to cut interest rates. And now he's saying it from his mouth. This is extremely bullish. So what we're going to do in this video is go over all the details of the cryptocurrency bull run and how the Federal Reserve could be injecting liquidity into the market. We're also going to go over Trump's actions and the big beautiful bill that just recently came out. And more importantly, we're going to figure out how to make money off this market. And if you're new here, my name is Alex, the founder of CoinPix Capital. I've been in cryptocurrency for 8 years, made millions, lost millions, and I make these videos as a way to connect with other investors. And just to be very clear with you guys, I never accepted a paid sponsorship in my entire career to promote an altcoin. I know that if I do that, I actually have to tell you guys, and the Security Exchange Commission can come for me. Also, my profits and P&L is confirmed by the Security Exchange Commission because I do trade for a living. So this is legit. I've been doing it for a while, and I want to show you exactly how to become a professional trader and remove all of the emotions from your trading strategy. I actually want to give you strategies, and we want to treat crypto like something that's real, not that something degen meme coins, none of that stuff. People are really getting rich off of this market, but you have to treat it like a professional. You cannot treat it like a gambler. So just to give you a brief breakdown, basically there was a big meeting yesterday, the ECB forum in Portugal, where all the central bankers go and they basically have a conversation about the world economy and things like that. And Jerome Powell was speaking. Now, obviously, they've been going back and forth, and Trump has these tariffs, right? And the deadline is July 9th. We made a full video on that. I'm going to link it above right here so that you guys, it's over there somewhere or something like that. I'm going to link it for you so you can watch that video. It's pretty important. It has to do with the Trump tariffs. But the point is that they've been going back and forth. And Jerome Powell has been blaming Trump for the rate cuts and why they didn't happen because of the tariffs. And then Trump has been screaming at Jerome Powell saying, hey, bro, cut rates. So in this meeting, we see another kind of like point the finger type of thing where Jerome Powell was basically saying the reason why they haven't cut rates yet is because of Trump, right? Now, the crazy part about this is that they've been making projections that we should be at 3.9 at the end of the year. Listen to what I'm saying. This is super important because the verbiage of what they say and what they actually do usually is different. So if you can see through and read through the lines, you can see before everybody else. And that's the claim I'm making in this video. I don't believe the market's going to pump today, but I do believe, based off of everything I'm saying, that the altcoin cycle is being manufactured right before our eyes. So some people asked him if he was going to cut rates in July, as you can see right here. And what he's saying is he's leaving the door open, but he wants to make sure the data shows that inflation is cooling. I want you to remember this. inflation is actually kind of important in the grand scheme of things, because if we take into consideration the big, beautiful bill that just passed, which I'm going to talk about because it's really important on this subject, and you kind of combine everything, it gives us a very, very, very clear indicator that we have early signs of massive liquidity injection into the market. And liquidity to me is like potential energy. It's potential energy of money that can fly into stocks and crypto. And so when they mean these interest rate cuts, right? We have a projection of 3.9 at the end of the year. And right now it's at 4.25 to 4.5. What they mean about this, right, simply explained, is that they're lowering the cost of borrowing money, which, by the way, to me has been one of the most important indicators for bull runs for since forever. Like, this is it. Like, if you're new here and you don't understand what I'm saying, just understand that interest rate cuts are like the number one most important thing. And they're right now saying, he said it from his mouth, you saw the video, and at the same time, their projections are saying they're going to have 2.25 interest rate cuts by the end of the year. So this is liquidity coming into the market. And if you combine it with what Trump is doing, because Trump has its own mechanisms, like he's doing whatever it takes to dump liquidity into the market. We see signs of that everywhere. If you take in consideration what Trump's doing, then we have a storm for a bull cycle, a perfect storm. And by the way, I want to show you something really cool. If you don't understand what I'm saying, I think it's very wise that you go to this website right here. It's called youtube-to-transcript.com. Just Google it or whatever the case is. Take the link to my video, get the transcript. You can literally copy it right here, and then you can actually put it into ChatGPT like this, right? And then you can stop it and you can say something along the lines of, hey, I don't understand this video. Can we go through the first 5 minutes of the transcript? Break it down for me like I'm 10 years old, but keep the detail. I want to make sure I really understand it. And then we're going to go through every 5 minutes, and then eventually I'll completely understand the video. And then what you could do is you could put these type of, prompts in there, whatever the case is. Go and work yourself through my videos slowly so you fully comprehend it. This is how you learn really, really, really fast. Really, really fast. So as you can see right here, he's going through the first. Once you comprehend it, then you move to the next 5 minutes of the transcript, and you could actually go through my entire video. If somebody's completely new, doesn't understand any of these concepts, it will give you a very high level understanding, and you can learn macroeconomics, cryptocurrency very fast. So just to get back to the story, basically they're going at each other, right? Trump's coming at Powell, Powell's coming at Trump. They're both blaming each other for, all these interest rate decisions and things like that. And as you can see right here, President Trump said he's not happy with Powell. He's going to replace him in May 2026, right? But at the end of the day, there's kind of two things you can draw from this situation. Number one, Powell said from his mouth that they will likely cut interest rates towards the end of this year. And I believe it's going to be 2 cuts of 0.25. That's the first thing you could draw. And then the second thing you could draw from the situation is, obviously, for your focus in your research right now, watching this video, whoever it is watching this video, you need to focus on the Federal Reserve and interest rate policy. If the President of the United States is talking about it this much, it should be a central point of focus for you. You need to ignore all the other things and truly comprehend this subject. And don't worry, I'm going to give you guys the breakdown as simply as I can and consistently as I possibly can as it plays out in real time on my YouTube channel. Which brings me to my next subject, which is, after this speech, we have the value of the US dollar dropping substantially. Okay, so I want to talk about something called the DXY. The DXY basically shows the value of the dollar, or the purchasing power, meaning back in the day, you used to be able to get a can of Coke for probably 10 cents. Now it costs like $1.50 if you go to a vending machine. So that means the value of items goes up in price, and the value of our dollar decreases based off of what the government does. So if the government spends more money, right, if they print more money, inflation devalues your dollar. And right now, after this meeting, we see the value of the dollar going down a lot. So let's explain this so you understand it. So how is the DXY calculated? So basically the DXY is called the US dollar index, and it's compared to the top 6 major foreign exchange currencies. So these countries have currencies. We compare them to see how the strength of the US dollar keeps up, right? So here's the 6 currencies that we look at. Now, if we look at the exact chart, we can see that we have been falling in value since over here, January in 2025. So really, since Trump came into office, the value of the DXY has been dropping. The question is, how does this affect risk on assets like crypto or stocks. Remember, our goal here is to make money. I'm not trying to figure out every macro condition of the market. That's not my goal. My goal is, hey, should we start investing in cryptocurrencies? Should we start investing into risk on assets? How do we make money off of this? Because to be honest with you guys, there's been a lot of periods of time throughout history where the value of the US dollar drops a lot. So does this impact us negatively or positively? Now, I'm not going to go into extreme detail and try to comprehend every macroeconomic condition. I'm going to just talk about things that are relevant to us. But let's go over all of the pros and cons of dollar devaluation. So the first things first is US exports, meaning the stuff that we send out of the United States become cheaper. It makes US goods more affordable overseas because of the difference of dollar. Listen to what I'm saying. It helps US companies with foreign profits, which is kind of like the same thing because of the difference of the dollar. It supports stocks and real estate and really investing in general. Just think about it. The value of the dollar is dropping, meaning nobody wants to save anymore. You want to put that money somewhere that will increase in value so you can preserve your purchasing power, right? You don't want to lose your purchasing power because of inflation, right? So these things are really important. And I think it's also interesting that the value of the dollar is dropping. And at the same time, Trump has been talking about tariffs. So obviously it's kind of important with imports and exports. Maybe he's doing something we don't comprehend. He is the business president. So in general, that's the pros. Now let's look at the cons. Imported goods become more expensive. Interesting. So all of the imports, which could potentially have tariff taxes now, right? It becomes more expensive, like oil, electronics, and medicine costs, right? This hurts US consumers. Now listen to what I'm saying. This only hurts US consumers if the consumer does not invest. So if you are investing, you're preserving the purchasing power of your money, right? But if you just put money in a savings account, yeah, you're gonna get hurt, bro, because the cost of everything goes up, right? It triggers foreign sell-offs of US debt. Now, this to me is kind of important because in other countries of the world, believe it or not, they actually own a lot of the United States debt. We're talking about trillions of dollars, and we're going to talk about that briefly in this video, but this is trillions of dollars that these other countries hold, right, in debt. So they can start selling that, which will actually reduce the amount of liquidity in our system. And I do understand that this concept is very complicated. I get it. But you guys should be using ChatGPT and you should be doing your own research as well. My goal here is to keep the level very high when it comes to actually understanding the market. Like, that's what I want to do. Like, these videos are just raw. Like, they're raw. I'm giving you the real stuff. And if you don't comprehend it, like, you have to have the humility to take a step back and try to comprehend it and watch the video a couple of times if you have to, because I want to keep the level of, talk here, the level of research very high. That's my goal. I don't want to give you guys fluff. I don't want to give you the mainstream stuff. I want to give you the real deal stuff. So if it's hard to comprehend, I'll try to give you simple explanations. And I think that's what I'm doing here. But if you still don't understand it, take it to ChatGPT. You'll do better. And then the last con is inflation rising. So this could be a problem, but I do think it's going to be a long-term problem. With all of these effects, by the way, of the economy, this stuff takes a long time. A very, very long time. It's not immediate. Nothing's immediate. Things take a lot of patience. So the dollar dropping in value could lead to inflation rising, I believe, in the future. Right now, inflation is kind of cooling off, and we can see it from Jerome Powell's mouth. He's saying it's kind of cooling off. I'm not sure yet, but we do see that we are going to drop interest rates, right? So in general, the dollar devaluing is not always super negative, which a lot of people are freaking out about that. Relax, there could be pros and cons, and I don't believe it's that big of a deal in context of the history of the value of the US dollar. I do believe Trump is doing something. He has it under control, and it's probably somewhere along the lines of a net neutral. I personally believe we should focus on interest rates and not the value of the dollar. I've done research on the value of the dollar for a very long period of time. I've been doing it for like 3 to 4 years. I've done analysis, and I find no correlation from crypto and the value of the dollar. I know a lot of people say it on the internet, but I do believe it's fluff. That's my personal opinion. So just to put it in plain English for you guys so you really comprehend, right? Jerome Powell and Trump are going back and forth about interest rates. Interest rates are probably the most important variable because when they drop interest rates, it decreases the cost of borrowing money, right? This usually puts money into the system. All cryptos and stocks go crazy. But because of yesterday's meeting, everybody's looking at the US dollar value, the DXY, and they're all freaking out because the dollar is dropping in value. But really, if you look at the context of what's going on, this actually means that people might actually invest more into risk-on assets like crypto and stock because the value of the dollar is dropping, right? Listen to what I'm saying. The value of the dollar is dropping. So that means for people to preserve purchasing power, they usually invest more, okay? Very, very clear. It's not just in risk-on. They invest in general. Now, there could be negative scenarios. For example, it could trigger fear. And these other governments could start selling the US government debt, right? They could be like, okay, look, I don't want anything to do with the dollar anymore. But this, I believe, only happens with big, fearful events. And see, the thing is, we've had big, fearful events. Recent history, we had a big, fearful event with the tariff policies. When Trump started wilding out with all these tariffs, this was crazy. And the markets did react. But we held up nice. We came right back, right? So this big, fearful event didn't trigger it. The second big fearful event was the World War III scare. We had this big fearful event where it's like the biggest, craziest one in the past 10 years, a big scare. Again, the markets held up nicely. So I don't think that that is a big negative scenario in the context of what we're looking at here. And we have proof, okay? Now, the second big narrative is that the Federal Reserve raises rates. We know that's not true. We know the rates will not rise. So although in the context of the value of the dollar dropping, this could be a trigger in the future, we know that's not going to be a trigger this year and probably even next year. That is not going to be the reason why Jerome Powell or everybody that's in the Federal Reserve, whoever it is, that's not going to be the reason why they raise interest rates. They will likely not raise interest rates. And I've been looking at interest rates for a long time. Usually, they don't, like when they start dropping, they drop for a long period of time. They don't change for a long period of time. They're not wishy-washy. Once they start dropping, they either pause or they continue to drop. So I do not believe, I think that the likelihood of that is like less than 5%, in my personal opinion. The likelihood of them increasing interest rates to fix inflation, to me, is like less than 5%. So this is what I meant by the early signs of the bull market are happening right now. This is what I was saying in the beginning of the video. I was saying, hey, he just kind of confirmed it because the negatives are not likely. They're not likely, and it looks like everything is kind of lining up. And if you've been watching my crypto videos, I mean, it's insane. It's insane the amount of crypto adoption vehicles that have been playing out. Yesterday's video was crazy. We talked about X stocks. Bro, we have RWA, real world assets. We have fake versions, or they're not really fake, they're real, but they're on the blockchain. We have versions of Apple stock that you can buy and sell 24/7 on the blockchain right now. This is insane, right? So the amount of vehicles in cryptocurrency that are being created, and if you look at the timeline of all of them, every single one, all of these new things, Bitcoin treasury companies, Ethereum treasury companies, if you look at the real estate thing, which basically you can now use crypto, as a collateral for a house loan, the timeline of that is talking about beginning of next year, end of this year. The interest rate cuts is the beginning of next year, ending of this year. Pretty much everything looks like it's like we're seeing the momentum build. And all of these adoption vehicles, the timelines are all playing out towards the end of this year. Listen to what I'm saying, guys. And usually, from what I've experienced around December and things like that, we have really good months for crypto because everybody starts trying to spend money and things like that. So yeah, the end of the year looks really, really bright for cryptocurrency in general, just to put it in plain English. And I do believe that this officially exposes it. I think this one piece of research right here just really puts a big check in my box when it comes to the crypto bull cycle. I really believe that the value of the dollar dropping will lead to more liquidity into the system. I really do believe that we will have interest rate cuts. I really do believe that there's more adoption vehicles in crypto. I really do believe these things, which brings me to my last topic of this video, which is basically the big, beautiful bill that just got passed. We're going to talk about that and how I really do believe that will lead to more liquidity in the system, aka potential energy for money to fly into crypto and stocks. This is all positive for risk on assets. So let's take a look at the big, beautiful bill, which is what everybody's been talking about right now. I want to give you guys a timeline of when the money is actually going to come into the market, right? So we can kind of see what's going on. And this is the most recent news that's super important, right, to comprehend. Now, the actual original document is like 1,000 pages. We're not going to go into all of it. We're just only looking at the things that are relative to us, which is what? How much of that money is going to go into the market, right? And this could actually, and this is the big subject everybody's been talking about, this could actually devalue the dollar even more. This is why it's important to understand the DXY and the evaluation of the dollar. So, July 1st, which was yesterday, the Senate passes the amended version with Vice President J.D. Vance breaking the tie. Now, today, the House prepares for a final vote, right, which is likely going to pass. I do believe it's going to go through. And I believe the target deadline for it to actually come into law is likely going to be July 3rd or the 5th, because July 4th is a holiday. So the law becomes immediate after the signing, okay? And this is where all this money is going to come in. And this is a lot of money, a lot of liquidity coming into the market. So what we're going to do is we're going to go over the specifics on how it could potentially affect crypto. So basically, there's been massive tax cuts and spending. This extends Trump's 2017 tax cuts indefinitely. That's $150 billion for defense, boosting border and energy spending, and it injects new money into people's pockets and the broader economy. Now, also what he did is a huge deficit expansion. So the Congressional Budget Office projects this will add $3.3 trillion to the national debt over the next decade. And also the White House themselves said it's going to add about $5 trillion of liquidity. We could take all of this with a grain of salt, okay? Maybe not that much money, but yeah, $1 trillion, $2 trillion into the market could be really, really cool. Just to make it extremely simple for you, what they're doing is they're raising the debt ceiling, okay? So that means that the government can now take out more debt, which means more money in the economy. Also, what they're doing is tax cuts. So in different ways, I'm not going to go into specifics, they're having tax cuts, and there's also going to be more government spending. So in every situation, this is why they've been talking about it. Remember, I told you that Trump has its own mechanisms to increase liquidity into the market. So just to put it super stupid simple for everybody here, very super simple, is that there's more potential energy, more money in the market, but more money in the market means that the value of the dollar drops. So the value of the dollar drops because of what Trump's doing. And we know that Jerome Powell is probably not going to increase interest rates. He's going to cut them. So Jerome Powell is putting more money and potential energy into the system. And at the same time, Trump is doing the same exact thing with this bill. So yes, the value of the dollar will drop, but that's not always a negative thing unless it causes like a massive panic. If there's a massive panic, then this could be really, really negative. I don't think it's likely. We've already had panic events. So I do believe like people are going to start investing. I really believe after everything Trump's doing and after everything Jerome Powell is doing, people are going to start investing. And this whole inflation topic will likely be relevant in about a year to a year and a half. But right now, it looks like it's really playing out. Now, this is where it gets really interesting. Please pay attention to this part here. So I want to talk about this chart I made the other day. This kind of gives an accurate representation because what we're looking at is all the little individual mechanisms, right? We have Trump doing this, Jerome Powell doing that. Let's just look at the super big picture, right? And so what we have here is the total amount of money, which is the M0. This is literally everything. Every dollar accounted for, everything, plus the total debt. So we have the money, and then we have the debt, and it's important that you take in consideration the debt. A lot of people, from what I've seen, and analysis on the markets and stuff like that, they don't take in consideration the debt. But the reason why I took both is because it kind of encapsulates all of the money in our system right now. And then what we see right here, the second chart, is the S&P 500. So what I did is I made a ratio that looked at the total money and divided it by the S&P 500. So long story short, just to make it really simple, when this ratio rises, that means the liquidity and debt are growing faster than market price. So we have the market price, and then we have the potential energy, right? So liquidity and debt are potential energy, and then the market price. So what we want to see is scenarios, listen to what I'm saying. We want to see scenarios where there's a lot of liquidity and debt, but the market is not reflecting, right? That's what we want to see. A lot of liquidity and debt is moving into the market. Boom, boom, boom. A lot of potential energy is moving in the market, but the actual prices of the stock market are not reflected. This will give us an undervalued situation, right? Because eventually the prices will catch up, right? If there's a lot of liquidity and a lot of debt, then the prices eventually will catch up. So when this ratio drops, okay, this means that market prices are outpacing monetary expansion. So we are currently dropping. Now, this doesn't take into consideration the last 2 months of data, but I do believe it's going to start reversing. I do believe this ratio is going to go up with what Trump just did and with interest rate cuts. With interest rate cuts and what Trump just did, this ratio will start to go up. Not only that, but the ratio is not that low. If we were down here, I would be like, hey, bro, the prices of stocks are very high in comparison to the potential energy. We are overvalued. So what I see here is we are on a downtrend, but the evaluations in the like somewhere in the middle. We're not like overvalued or undervalued. We're somewhere in the middle. And I see that everything when it comes to monetary policy, everything Trump is doing will bring this to go up. This ratio will go up. I believe that all this new liquidity will be reflecting in marketplaces, and we'll update you guys as this chart goes on. But again, I do believe it's going to go up. I do believe that liquidity and debt are going to start growing faster than the market prices, and this will give us an undervalued situation for crypto and stocks. And the reason I say crypto and stocks is because they're pretty much the same thing, basically. And if you combine that with our theory that we've been talking about for a long time, which is, hey, like even though the value of the dollar is dropping, I don't think that these countries are going to get rid of all their bonds and their treasuries and government debt. I don't think they're going to do that. And even if they did do that, you know, our theory that we've been working on is there's companies right now that are creating crypto projects. Listen to what I'm saying. This is where it kind of, you put the cherry on top to what I'm saying, which is there's these mechanisms that there's a reason I put in the intro that Trump made like 64% of all of his money in 2024. Like it seems like he's really leading the show and making it happen. Why is he creating all these crypto projects? Why is he creating his own stablecoin? Why is he doing these things? And we kind of see a trend that you can't fully prove. This is a theory, but it looks very obvious to where there's these companies creating crypto projects. And when they create a crypto project, the more people adopt the cryptocurrency, the more money they have to invest into government debt. Now, right now, Tether has about $120 billion, and it's among the top 20 holders globally when it comes to buying government debt. Listen, it's a very complex subject. I'm not going to go into it, but they're buying government debt. Same thing with Circle. So we see a trend. Now, obviously, some of these companies don't disclose this, but I would not be surprised if we see, for example, centralized exchanges doing the same thing. So meaning all of the money on a centralized exchange, they could actually take your money and invest it. People don't know this. So for example, when you put your money in a centralized exchange, let's say there's $5 billion, they are legally allowed to take that money and invest it somewhere else. And then when you ask to withdraw it, all they have to do is take the investment out, give it to you, and you have your money back. They're allowed to do that. This is why FTX exchange went bankrupt and everybody lost their money because they were investing it in a very, very aggressive way. Now, after the FTX exchange bankruptcy, I think some of these centralized exchanges are going to probably be a little bit more conservative. And what's the most conservative investment in the world? Government debt. And by the way, if you don't understand what I mean by government debt, basically, you can go to the government, give them money, and they will give you an IOU. And they'll even give you interest on top of it. So if you give the government $1 billion, they'll be like, okay, I'll give you the $1 billion back plus 5%. That's government debt. So USDC, Circle, the creator of Circle, and Tether are taking their stable coin, right? So if you give Circle $100, they give you USDC, which is a $100 equivalent in the crypto world. But they are legally allowed to take your $100 and put it to wherever they want. And it seems like they have been putting it into government debt. So this whole argument of the value of the dollar dropping because of what Trump is doing with all of this big, beautiful bill and what Jerome Powell is doing with the rate cuts. So the rate cuts, Trump, right? Big, beautiful bill, value of the dollar dropping. This could scare the world into selling U.S. debt and getting away from U.S. debt, which takes away liquidity from the system, which crashes the markets. I believe, I'm working on a theory. I don't know for sure. This is not fact, but it really does look like there's a lot of private companies and public companies using crypto as a crowdfunding source. The people that buy into their crypto projects or their stable coins or whatever, right? We just saw that Robinhood came out with an artificial stock market in crypto, in DeFi. We just saw, right, that Bybit did the same thing. We just saw this happen literally yesterday. They're creating these crypto financial projects, and when you buy them, you don't know this, but the money that you're using to buy them actually goes into their pockets for them to use it for whatever they want. And the trend really seems like they're buying government debt. So there's this weird new mechanism that nobody probably, I think I saw a couple people talking about it, but nobody fully comprehends because it's so new right now. It's so new, but I do know that the demand from crypto is being used to inject liquidity into the market, aka buying debt. They're buying debt. They're taking the money. The crypto guys are like, hey, government, give me favorable regulations. Like, please, like, help me out. I want to build crypto projects. And for that, what I'm going to do is I'm going to buy all this debt. I'm going to give the government money. And they're getting that money from people that are investing in crypto. So it's very clear, right? Trump's launching all these financial projects, all of them in crypto. He's making the vast majority of his wealth in crypto, right? There's a reason why he's doing this. Crypto is being used as a crowdsourcing method for the government. This is the concept called shadow quantitative easing, a new way of liquidity injection that we have never seen before. And that is what you guys should be looking for. This type of stuff. And I'm going to elaborate on the theory as we go through it because it's one of the hottest topics in my perspective. It's really important. Do I think that right now it's meaningful enough to prop up the entire economy? No. We're talking about trillions of dollars. Look, trillions of dollars in other countries. So is it meaningful enough right now to like really inject a vast? No, I don't believe that, but I do believe it has meaning. I do believe it's coming into play and it's real, right? So yeah, it's important. When it comes to this Trump bill, the 3.3 trillion, yes, the value of the dollar will drop, but I do believe it's being offset. And I think there's a reason Trump's doing it. I think he also anticipated that. And yeah, with all of these new things, centralized exchanges, X stocks and things like that, I do believe it will be more treasury demand, which means more liquidity into the market. There are so many new mechanisms of liquidity moving into the market for a fact. So we can't prove this yet, but it is a thing and we should pay attention to it. And yeah, this was very hard concepts to understand, so I will elaborate on these subjects to make it more simple for you guys. Thank you so much for being a part of my community. If you like the quality of this content, hit like. If you don't, leave some constructive criticism, subscribe for more video updates, and like I always say, if you don't get with it, you will get left behind. Catch you guys in the next video. Peace out. Talk to you later.